Welcome back. You're watching Commodity Champions and I'm Manisha Gupta. Well, the government clearly has talked about or increased MSP, but we also have seen the Met Department maintaining its above normal monsoon forecast. The rainfall is likely to be at 106% of the long period average. The union government has announced a hike in Kharif crop prices as it plans procurement worth over 2 lakh crore rupees in this financial year. And in a bid to ensure price stability, government also has cut the import duty on edible oils. So what does it all mean for the agri economy with the kind of steps that the government has taken when it comes to edible oil, pulses and then wheat as well? To take this discussion forward, we are now joined by Bimal Kothari. He's chairman at the India Pulses and Grains Association. Mr. Kothari, hi, thank you so much for joining in. We have seen government do a lot when it comes to stabilizing the prices and ensuring enough availability as well. And as I was talking to you last time, we talked about on how the government has allowed duty-free yellow peas with the 7 extensions there, and an 8th one perhaps has come in as well. What does it really mean for India, for the industry, and what are the kind of imports that we are seeing in sense of yellow peas?
Thank you, Manisha ji, for inviting me to the show. As we discussed earlier also, in fact, yesterday only. So I mentioned that, and I would like to reiterate once again that this policy of importing yellow peas at zero duty, I think this is a very disappointing step for the not only for the industry. I think it is very disappointing for the farmers also, because you see, let me give you some background. You see, this yellow peas is, it was prohibited for 5.5 years, and government didn't want to import the cheaper pulses because it was hurting the Indian farmers. And when they stopped this, that was the contention that the cheaper import is hurting the Indian farmers, and that is why we should not bring the cheaper import. So they stopped the complete import of yellow peas till December 23rd. And so in December, since we had a El Nino effect on our production of the pulses, so they allowed the import of yellow peas at zero duty. And I think that was the time we required it, because the price of pulses were going beyond, affordable level. So, and that was the right move. I think that I will appreciate the government's efforts on that. So, but when that initiative has been met, that situation has been met. Now we had a good monsoon last year, and also our production is quite satisfactory this year. We have seen the production of other pulses like tur and even lentils and even chana, and all the price of pulses. Not only one or two, but all the pulses are ruling below minimum support price. So I don't think we require now the cheaper pulses, because on one hand, the government of India is increasing the minimum support price. Recently, they announced that the minimum support price for tur and urad has been increased by 4.5 rupees. So tur's minimum support price is now for 40 rupees for this Kharif season, and urad's minimum support price is 78 rupees, whereas the moong price is around 88. So if you look at the price of the minimum support price of the pulses, they are around 80, 85, 80, 86. Whereas the yellow peas import is going to cost us around 32 rupees, because the new crop is going to start in Russia and Canada, and they have a very substantial amount of the crop. And India is the biggest market, because we should know that we have imported 3.2 million tons in just last 15 months.
Right.
And last year, our import was the record import.
That's exactly my point, Mr. Kothari. If we saw record imports last year, and with the way we're looking at cheaper imports continuing in this year as well, do you see numbers increase as compared to last year also?
If this policy continues, you see, India is the biggest market. The price will matter. Then the quantity doesn't matter. What we have just observed there was a GPC conference just a few days back in Singapore, and all the numbers what we have seen, whether it is in Australia, there is an increase of the production. They are expecting about 2.5 million tons of chana. The 40% increase in the lentils production. There is a substantial increase of yellow peas. In Russia, there is a good amount of crops in Canada and Africa. Normally, it has been 700,000 tons of tur, whereas this year we are expecting about 1 million ton. Then urad, Brazil is new origin. They are coming up with around 2.5 lakh tons of urad, whereas in Myanmar also the crop is very good this year. They have got about 8 million tons of stock. So if you look at the origins, the supply is in abundance, and definitely they have to look at the Indian market. As of now, as of today's policy, all the pulses are allowed into India for as far as the import is concerned,
Right.
and only on the lentils and chana there is a duty of 10%. Otherwise, all the pulses are at zero duty. This is going to, I'm telling you, this is going to harm the Indian farmers.
So would you
Because
also see prices going further decline from here? I mean, what are you anticipating? As you said, we are already trading at or below MSP. Do you see a further decline? Do you see a threat of that?
definitely, definitely. Let me tell you, for example, tur, pigeon peas, which we call pigeon peas, tur. So tur now is selling around, the African tur is around selling around 60 rupees. But they have a crop of about 1 million tons. They have to sell because India is the only market where this can be, exported. And India is the only country which imports tur. From whether from Africa or from Myanmar. These are the two origins which produce the tur. So entire production has to come into Indian market. Government has already procured about 6 lakh tons. Despite of that, the prices are below minimum support price for the local domestic crop. So and now we are expecting this African tour to start arriving in the month of August. So I'm sure that the price will come down to by another 10 rupees. So if you look at the situation that tour is selling at 50 rupees, the imported tour, and whereas our minimum support price is 80 rupees. In the this year, as of now, the monsoon looks very good. We had a good spell of the monsoon, early monsoon in the month of May. So if this continues, and if we have good monsoon, if we have a good crop, we are going to see a crop of tour more than 4 million tons. Last year, as of trades figure, of course, the government figure was a little low. But as far the trades numbers are concerned, the crop is estimated at 4.2 million to 4.3 million tons, and which we can see on the ground because despite government buying 600,000 tons, the prices are below minimum support price. Still in the mandis like Karnataka and Solapur in Maharashtra, they are at the mill delivery, the prices are around 68 to 70 rupees. So you can see, I mean, whereas now the new minimum support price is 80 rupees. So if you are importing something at a price of 50 rupees, even less than that, and then government to buy at 80 rupees the entire crop, I think this
Not
looks
going
very
to happen.
contradictory, and also doesn't go by the fiscal prudence also. So I think the
Sure.
government needs to relook at this policy because this is not only going to hit the trade and industry, but it is also going to hit the Indian farmers, all the stakeholders who are in this business of the pulses.
I get your point, Mr. Kothari. And as you said, 2024 was record import of pulses. 2025 perhaps could be higher than that. And this is at a time when India is looking at a good crop and most of the global countries are growing pulses for India. So clearly a stage where we are looking at cheaper prices perhaps going ahead. And I take your point that it doesn't work well for the farmers or the industry as well. And how much of that is passed to consumers is yet another debate. But thank you so much for joining and making sense of what really is happening in the Indian pulses market there.